This is the Scrap Metal and Commodities Recycling Report by BENLEE Roll-Off Lugger and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, May 2nd, 2016. In this report, last week, many commodity prices continued to rise, while some economic indicators remained weak. U.S. steel production rose a bit to remain near its 7-month high and slightly ahead of last year. Crude oil prices continue to rise as production remains high and global consumption continues rising as well. Prices are up an enormous 70% from their February lows. Despite the increase, the U.S. oil rig count declined again last week. The oil rig count hit a new 6-year low and is about 80% below the count of just 18 months ago. If oil prices continue their rise, this will reverse, and steel used in these rigs will rise. U.S. ferrous scrap prices stayed level, but with export prices rising and flows into scrap yards only slightly better, most believe we'll see prices rise more than $20 a gross ton this week. Hot-rolled coil steel prices continue to move up and are now at prices not seen in more than a year. This is a positive for steel mills and a negative to manufacturers who are buying coiled steel. With steel prices up, many Chinese steel mills that shut down last year due to losses have been restarted due to their ability to be profitable at these higher prices. Chinese steel production in March was at a new record high after being at multi-year lows in February. But a report received out of Asia last night said that there could be shutdowns again later this month due to some softening of steel prices in Asia. 3 or 4 stainless scrap prices dropped a bit, but are near multi-month highs. Copper ended the week near 6-month highs, and when looking at this 5-year chart, we see copper inventories have stabilized near about 7-year lows, which will keep upward pressure on prices. Aluminum prices also rose to an almost 9-month high, and when looking at this 5-year inventory chart, we see that inventories also hit about 7-year lows. The U.S. Federal Reserve, headed by Janet Yellen, chose not to increase interest rates last week. And they said economic activity appears to have slowed, and growth in household spending has moderated. Although households' real income has risen at a solid rate and consumer sentiment remains high. A mixed report at best. Related, the U.S. GDP growth slowed to 0.6% in the January-March period, slower than the 2 to 3% or more that many want, and that's a reason for the continued low interest rates. U.S. durable goods orders, items like trucks and heavy equipment, rose a small 0.6% in March after a 3.1% decline in February. There remains no upward trend in this important measure of economic activity. The U.S. Consumer Confidence Index dropped a bit, but is at a good level compared to where it was just 2 years ago. This is an important indicator of future consumer spending. This chart shows the Baltic Dry Index. It's an index of the cost of shipping all commodities like oil and grain around the world. It hit a multi-decade low of 290 in February, just a few months ago. Last week, it was about 710, more than double the rate of just 10 weeks ago, indicating that global economic activity and shipping is finally improving. In another sign of commodities pricing stabilizing, the light blue line is the percent of Chinese steel mills that are losing money. At 13.5%, it's the lowest since December 2012. It was close to 100% a year ago. Waste Management, the largest hauler of waste in the United States, announced terrific earnings last week. Importantly, they said their volumes turned positive for the first time since 2012. Waste generation is an important indicator for the U.S. economy. While the U.S. weekly initial jobless report was up a bit to 257,000, it was the 60th week in a row of under 300,000, which is the longest streak since 1973, over 40 years ago. With that, we hope all have a safe and profitable week. My name is Greg Brown.